There is a new front in the US-China rivalry at the center of which is the US dollar. China is betting against the dollar. It wants the American currency to fall, and for this Chinese banks have been mobilized. They've been working on this mission since last year. Apparently, they're making bets against the US dollar, and they have paid more than $100 billion into these bets. That's right, Chinese banks have bet more than $100 billion due on the US currency to fall. So, if it falls, these Chinese banks will make a profit. Bankers call this move a short. What is a short? Let me explain. Using an example, say there's a small Chinese bank. It has 100 yuan. This bank decides to place bets against the US dollar. So with this 100 yuan, it goes to an American bank and strikes a deal. The Chinese bank lends 100 yuan to the American bank. In return, it borrows the same amount of money, but in the US dollars. Now, at the current exchange rate, today's rate, 100 yuan is worth about $14. So now the Chinese bank has got $14, and the American bank has got 100 yuan. But this is a loan from the Chinese bank, so the exchange is done. The two banks shake hands and they agreed to meet 1 year later. In this period, in this 1 year, the value of the dollar can go up or down. If the value falls, then the American bank will have to pay more to the Chinese bank. It will have to pay more than 100 yuan to reclaim its $14. So when the two meet again after 1 year, the Chinese bank will check the exchange rate. It will calculate the difference, and if the dollar has fallen, then the American bank will have to pay more. This, in a nutshell, is shorting. This is how traders short companies in the stock market. In a similar fashion, investors can place bets against currencies too, and banks use a special instrument for this. It's called a foreign exchange swap. Since last year, Chinese banks have been doing a lot of these swap transactions. Transactions worth more than $100 billion. According to one estimate, that's a huge sum. But why are the Chinese doing this? Is this some kind of currency warfare? Well, not exactly. It's more of a defensive strategy. China's central bank is the driving force behind these trades. It is using these short positions to defend the yuan. How does that work? You see, when a bank takes a short position, when it swaps the yuan for the dollar, this trade reduces the yuan circulation, because when the yuan is swapped for the dollar, there are fewer yuans available for trading. The supply goes down. It makes the yuan scarce, and anything that's scarce, anything that's harder to get, usually costs more. That is what China wanted to prop up its currency. Because the past few months have been tough for them, the Chinese currency has been losing value. In the month of June, it dropped to a 7-mon low against the US dollar. And what triggered this fall? Two things. The US dollar is becoming stronger, and the Chinese economy is becoming weaker. This year, investors have pulled out billions of dollars from the Chinese market. All this has led to the weakening of the yuan. But instead of fixing its economy, China is resorting to the next best option, and that is pushing the US dollar down, and in the process hoping that the yuan recovers. The strategy has its own risks, though. If the dollar continues to strengthen, then Chinese banks will take losses. In fact, they've already lost billions. One estimate says that they've lost anywhere between 5 to 16 billion. But Beijing is not giving up. Instead, it's assembling more firepower. It is looking to mount a new challenge. This time, China is targeting Wall Street. It has ordered a merger between two state-backed brokerages. Two brokerages in China. Together they will create a $230 billion powerhouse. Now, this deal is yet to be approved by shareholders, but it's a mere formality. At this point, broadly, China is revamping its financial sector. Xi Jinping ordered this consolidation himself last year. He met Chinese regulators and he spelled out a new game plan: cultivate top-tier investment. Banks give more muscle to China's financial sector and compete with Wall Street. That's what he wanted. Now this big merger is being seen as a step towards that. Something like this was hard to imagine a few years ago because of how deeply the Chinese and American economies were intertwined. American companies were investing billions of dollars into China. Chinese companies were going public in the US until 2019. More than 150 Chinese companies had listed on major US exchanges. Together they were worth over $1 trillion, but now a split looks inevitable. The US is building trade barriers against Chinese goods. American companies are being pushed to rebuild their supply chains and reduce their dependence on Chinese factories. At the same time, Xi Jinping has launched his own campaign. He is waging war against a Western low world order. The divide between China and the US will only deepen from here. Thanks for watching this video.